Wall Street growing more cautious on the outlook for corporate profits amid record high inflation and rising interest rates. Our Brian Sozzi found two charts that show the stock market's next problem, and that's where we find his take today. Sozzi.
Yeah, you read enough research reports, cool things just hit you right in the face, and this is what I'm finding from Credit Suisse's Jonathan Golub, who's been on with us a bunch of times. First up, Jonathan calling attention to the collapse in earnings estimates for the S&P 500 since September 30th. And you can see right there, that little squiggly blue line, that is the current downtrend in corporate profits, whether it's because of inflation, higher interest rates, supply chain challenges, slowing consumer spending, whatever it is. Analysts right now are slashing their earnings estimates for S&P 500 companies. And again, this comes at a time where pretty much the market has been on an upward trajectory over the past month or so, and that is another way of investors saying they are ignoring what analysts are doing in terms of corporate profits. I'll have more on that in a second. Next chart here is the look at corporate profit estimates by sector. There I am, look right there under that 4.9% decline for the S&P 500. The only sector that has seen positive revisions is, in fact, energy. Of course, energy prices remain high, but you look across the landscape of S&P 500 sectors, financials, non-cyclicals, materials and industrials, discretionary retail, and tech. Tech getting some of the most significant earnings revisions to the downside. And Brad, that comes despite a lot of the layoffs we are seeing in tech. So the street is saying the sales are going to slow at such a clip likely over this quarter and potentially next year that maybe these tech companies have to cut back even more expenses to make an earnings number.
All right, so what's the take today?
Take is this: respect corporate profit estimates. Like I just mentioned, there we are. I love
Moneybag me.
I love it, the Brad outcome. Yours looks better than mine. Man, it's just so on the mark. But anyway, the market has been ignoring corporate profit estimates, and normally what happens is the market tracks corporate profit estimates. Corporate profit estimates go up. Stocks usually go up because there's more optimism for stocks and the profit potential and the cash flow potential. But right now, the market is ignoring it, and they should probably pay attention. I understand they're cheering today's consumer price index report, but prices are still high. Supply chain snags are a real thing, and it is not clear, at least to me, that we're going to have a blowout holiday shopping season.
All right. Well, as the graphic said, secure the bag one way or the other.
Throw it in the bag.